So you want to learn a little bit more about support and resistance. Fantastic. Support and resistance are two of the three primary indicators. We'll learn a little bit more about trend lines later, but support and resistance are two key elements of all technical analysis. So what I have up on the chart at the moment is I have a chart of gold, and what we're going to try and do is identify a resistance level. Now, a resistance level is an area higher than the current market price that we find the sellers come back into the marketplace. And what actually happens is the price seems to fall at this level. Now, we can trade off the back of that in a number of different ways, but let's try and identify that resistance line first. So what we have is if we go down to the drawing tools, we have one there called the S&R line. If we click the S&R line, what we can do is we can clearly identify an area just around about this level, about 1015, that each time the market starts to reach that level, it starts to drop down in value. So we'll click here and release that. So you see the market approach this level, falls in value, approaches this level and starts to fall in value. The first way you can trade is that you think history will repeat itself, that once it starts to reach that resistance level, the market will say, okay, time to actually take some profit, and the market will fall. What we need to do is just do a selling opportunity just below that resistance level. So trade off the bounce. Don't trade when it's approaching, trade off the bounce. But make sure that you put your risk management levels on at the same time. So make sure that you put on a stop loss just above the resistance level. So if indeed it does break out and goes above, then we make a small loss and we move on to the next trade. The second approach is that we think history will not repeat itself, that the fundamental news out there in the market is actually positive and the market will start to go up and break through that resistance. Here what we need to do is simply place a buy order above the resistance level. But again, make sure that you put that stop loss just below the resistance. So if indeed it is a false breakout and the market goes back towards that trend, then we get out, we make a small loss. But the general feel is that if we do have a technical breakout, this is a fantastic opportunity to take advantage of this new change in trend and make a profit on the upside. The reverse side of this is a support line. A support line is completely the opposite of a resistance. It's an area lower than the current market price where the buyers come back into the market. Now, on this chart of pound versus Aussie dollar, again, if we go to our drawing tools, click on the SR line, we can start to see here in the beginning sections of this chart that there's a support level here at 1.5950, somewhere around about that level. So you can see each time that it comes down to this level, it protects it and the price starts to go back up again. Again, the same principle here. We start to see the market approach this level and it bounces back off. So this would have been a perfect opportunity to do a buy trade. We buy in just around about here, but again, make sure that you put that stop loss on the bottom side, so just below the support level. Don't place it too close. You need to give the market a little bit of movement, but remember to place it nonetheless. So here, if we'd bought here, we would have made a very handy little profit on that upward movement. The second is when the market started to approach this level again, well, the fundamental news out there might not have been as positive. And we think to ourselves, well, actually, if it breaks through, we want to take advantage of a downward movement. So we would wait for it to break through that support level, and we would then click on the sell button to sell into the market to make a profit from a falling market. And remember the stop loss just above. Now, support levels and resistance levels can quite often come back into the marketplace. So it's important to keep those support and resistance levels on the chart at all times, because you'll start to see that the market did indeed recover after that breakout, went back up, and then when we come to the remaining section of the chart on the right-hand side, that support level again starts to form on this price of pound versus Australian dollar. So again, that key level will be important in the future. So keep those support and resistance levels on. Now, go out there, have a look at a lot of the charts. You'll start to see these support and resistance levels on there quite frequently and see whether or not you can trade off the back of those. Remember, use a demo account to practice first, and then you can start using the live account to potentially make some money off the back of these technical tools.